Hey traders, TG Watkins here. It is June 2nd, Thursday, when I'm recording this. And if you guys have any questions about who I am or haven't seen anything before, come over here to profitpilot.com. And then also keep in mind that I just posted last week a bear market update about what I think is going on with this market, some things underneath to pay attention to, and kind of see where we can go with this. So do keep in mind that we are now in summer. Summer is usually lower volume. It can be a little bit sporadic, more difficult when it comes to trends. So just kind of keep that in mind with your trading. Maybe take profits sooner and then be quicker about exits and stuff like that. So it's just going to be, it's tough out there. All right, now one of the things that I wanted to cover was the S&P. Now that we have an extra day talking about some things, we can see that price actually had yet another bit of a short squeeze. There was a double bottom here on the 15-minute time frame that set price off. And I'm still looking for price to pull back to under its hourly 50. So, there's a bit of a trend line, kind of like this. If I were to draw that straight, there's a trend line that I think if price were to come down, it would probably come down near the $400 mark. I'm kind of just ballparking at that range. But I'm still looking for price to pull back, mostly because it has not tested the hourly 50 at this point. And so that is going to be something that generally for me, what I look for is that's important, because on the daily chart, it's a little bit sloppy, but I can still consider this an elf shoe. So we got the leg, we got the heel. This might be the arch of the foot, and then we might get a bigger drawdown, ball of the foot, and then we'll see if we can get the elf shoe or the elf toe, because I'm a little stuck between a rock and a hard place, because if price continues up from here and tags the daily 50, that's, to my mind, is going to be not that great and actually more unstable. So if on this move we get all the way up here, that's going to be an inverse trampoline move, because the Moxie indicator on the daily chart is still very far below zero. And if it gets up there in the next few days without testing the hourly 50, then the longer that price goes without testing the 50, and the further that price goes without testing the hourly 50, the more unstable it becomes. So even if price continues to move up, then there's just a giant air pocket underneath, basically, because it's never tested anything for support. It just took off, So this would be maybe a little bit of a short covering rally, short squeeze, something like that. And yeah, as I said, it just, to me, it's going to be unstable if it doesn't pull back. Now, if it does pull back and we get down here and we get down here, then for me, that would be kind of like a double bottom. This is the elf shoe pattern that I talk about. And I think that would help reset things, and I'll actually allow price to go up in a more robust sort of way. So that'll be my preferred path. But if we don't get that, we get the other path, and then I think we can talk about what that's going to do. And I think it's going to make it more unstable. The other thing to look at in the near term is the 15-minute time frame, and you can see here that price has not tested the 15-minute 50. So I'm kind of looking at that and seeing if it's going to be an issue sooner or later. So kind of keep an eye there. And then if we look at the UVXY, this is the leveraged volatility, so triple X leveraged volatility. And there's, I kind of put pieces of the puzzle together. I try and look around the market and see if there's anything that's giving me clues one way or the other. And I'm kind of getting the same picture for what I think the S&P should do. So I think that the S&P should actually pull back. Well, if that's the case, then we should be seeing signs or clues or something to that extent that the UVXY actually wants to move up. And I am seeing that. So if we look here, you can see that price has been going down for several days. But notice that the Moxie indicator on the 15-minute time frame has gone flat and starting to turn up a little bit. Now, I'm not looking for a big move. It's nothing I really want to trade, because this is kind of risky. It's counter trend. I'm really just kind of looking for a pullback in the S&P, which means I'm looking for a bounce in the UVXY. And then I think we'll carry on. The other thing I'm also seeing is that it has been a while since price has come up near the hourly 50. There's starting to become a big gap between price and the hourly 50. So same thing like the S&P. I'd love to see price come back down, test the hourly 50. For the UVXY, I'd love to see it come up and get rejected by the hourly 50. So I'm kind of seeing the same story for both situations, just in opposite directions, which kind of confirms what I'm looking at. So we're going to have to give it a few days to see if this happens. Again, nothing I really want to trade too much, but I am looking for price to kind of come up like this, and then we'll see if it can roll over again. And for the SPY, I'm looking for it to pull back and then see if it can get some traction. So that's the UVXY. The other thing I wanted to show you, RLGY. I was just going through my charts today, and I came across this, and I was like, oh, well, this kind of looks very similar to, say, the S&P and what the S&P could possibly do. So, just an idea, because I like to use other tickers and other examples as roadmaps so that we can get a better idea of what might be happening, because it's maybe a little bit difficult, especially for newer traders or people who haven't been following me, to understand my lingo or kind of what I'm seeing. And to be able to give an example, I think is much better than kind of this abstract thing that I'm trying to draw. So I came across at RLGY, and I think it gave me that example that I'm looking for. And what we can see here is right in this area, it appears to be very similar to what the S&P is doing. Let's say the S&P kind of had its move over the hourly 50, and then it pulled back, and then it bounced, right? Well, notice how there was still a gap between price and the hourly 50. And so what did it do? Well, the next day it came back down and tested the hourly 50. Okay, well, then look, we got even another move, bigger move actually, out of that from testing the hourly 50. But yet again, it wanted to come all the way back down here, and now it got underneath the hourly 50. So as crazy as this is, the goal of price getting underneath the hourly 50 and creating a trampoline move, because remember, trampoline move is when price is below the 50, but the Moxie indicator is above 0. It's a bullish setup. That's what it did. So this would have been super difficult to trade in the moment, because you would think, okay, here it tested the hourly 50. Great, let's go long. But then it would have thrown you off by doing this, and you would have said, oh, well, that's a trampoline move. Let's go long there. And hopefully you would have caught that at the time. If you look down low, you can actually see that there was a double bottom right there. So I think that was probably the confirmation of the move to the upside. So I'm just putting it out there that I wouldn't be surprised if the S&P kind of did something like this over the next few days. It's already kind of looking like it is. On the 15-minute time frame, you could see that price got over the 15-minute 50, but failed it. And you can see again, price got over the 15-minute 50, but failed it. And so, yeah, it's going to be really interesting to see if the S&P does this, to where there's still a gap between price and the hourly 50. And let's see if it can pull back to the hourly 50. Who knows what it's going to do after that point? And then honestly, it'll be interesting to see if price gets underneath the hourly 50. And it could just do it by this back and forth sawing action. Now, the other thing, remember when I was talking about the S&P, I said, I do think that the daily 50 is going to be a target. Now, price can get past it, but I think that's probably, I think the S&P price and the daily 50 will meet at some point. It's just baked into the cake. The question is, at the time, will it be able to get past the daily 50? So what you can see here is on the hourly chart, when price did this zigzag sawtooth thing, back and forth, back and forth, back and forth, and then it launched, where'd it go? Right into the daily 50, and then it pulled back. Now, maybe this thing keeps going at some point, but the point is that if you're trading short-dated options, or if you're just trying to make good trades, trading right to the daily 50 would have been a good move. You get out, and then maybe you try again later for some other setup. But that was perfect, and that's what I think is a good example of what the S&P could be doing. All right, if we look at the NASDAQ, it's all basically the same thing. And there's still a gap between price and the hourly 50. So that has me a little bit concerned and still wondering if price is going to kind of pull back, retest the low area. I don't know, 295-ish. And then we'll see if it continues to move up to the daily 50. The IWM is already basically at the daily 50. Probably by the time the daily 50 actually gets to where it's going, they will probably actually be nearly touching. And it'll be interesting to see if this pulls back a little bit too. Now, just keep in mind, anything's possible. Look at the last time. So if you don't think price can't come all the way back down here, well, look at last time. I know it's different, but it's possible. You can see here, got a huge move down there. Right here, we got another huge move down there. It's definitely possible. So just make sure you're kind of thinking the full picture of where price can go. And if you don't think it can go someplace, it probably will go that place. So that's the IWM. Another thing to kind of look at, if we look at MSFT, Microsoft, now it took some news. There was some news out there today, and this is what brought it down. But it did complete the pattern that I'm talking about. It completed the 50, 200, 50 maneuver. So exactly like the RLGY ticker I showed you, and basically anything else I've shown you before about this pattern, is with the S&P, there was this gap between price and the hourly 50, and I'm looking for price to pull back to or below the hourly 50. And lo and behold, there's Microsoft doing that. And so that's what I want to see. Now, is it out of the woods? Maybe. I would imagine that it's going to move in a very similar fashion to the market. So if the market pulls back, then we could expect a little bit more sideways chop in Microsoft before it can go higher. So that could be a thing. But yeah, Microsoft, it did exactly the thing I was looking for, filling that gap on the hourly chart between price and the hourly 50 and went down there. So that was also a trampoline move. Remember, a trampoline move is when price is below the 50. So you can see price went below the 50, but look how high the Moxie indicator was. So it does make sense that it got bought right back up. All right, so that's Microsoft. And then Apple was actually giving me a pretty good picture of the same thing I'm talking about here. So this is why I'm just a little bit concerned. I guess price could hold the 21 and keep moving up for a little bit, but what I'm looking at is here's the leg, here's the heel, here's the arch of the foot, and I'd love to see price come back down, retest the low area. Again, we're not sure where it's going to be, just kind of the low area, and then we'll see if it can hold, and then I would imagine that is going to be what takes price to the daily 50, whenever they meet. So that's the pattern I'd love to see. It's looking pretty clear on Apple, which is why I'm using this as an example. And you can see yet again, there's this big gap between price and the hourly 50. And I just typically see that it gets filled, more often than not, it's going to want to pull back to at least the hourly 50 and maybe below it. But right now it's getting caught up at the hourly 200. And yeah, the Moxie indicator is kind of looking weak here from trying to do a double top of some sort. So who knows how long it takes, but that's generally what I'm looking for. And we'll see if that can happen. If it does, then I think it'll set up for a really nice long trade. But right now, I'm not interested in going long. I think that the move has kind of already happened. And I rather wait for my patterns that I'm more familiar with, which, if you guys know me, I talk about the first move versus the second move, which also goes into conjunction with the elf shoe and the 50-250 maneuver. So I'm seeing all the same patterns line up to try and tell me that maybe we should hold off on any longs right now. So same thing, Google, here's the leg, here's the heel, here's the arch of the foot. If you're looking for price to come back down, retest the low area, and then we'll see if price can come back up, and then hit the daily 50, wherever that is at the time. You can see here, same thing, 50, 250 maneuver, and just that giant gap between price and the hourly 50. That doesn't usually last too long, especially when things are going counter trend. All right, so let's see, Google, Amazon. Now, Amazon has their stock split, I believe, on the 6th, which is just a few days away. Let's see, the 6th is going to be Monday. So yeah, right around the corner. Now, for those of you who are watching this, you are probably well versed and are familiar with the action, what happens with a stock split. It's people on the inside who know that a stock split is coming, and what they will do is, given the right market conditions and situations, a few days, couple weeks before the split, they will drive the price up because they know that suddenly on the 6th, it's going to be a much, much cheaper price. And to the rest of the masses, they're going to be, wow, Amazon got their price reduced and now I can afford it. And gosh, of course I'm going to buy Amazon because it's an amazing stock. So let's go buy Amazon for cheap. And that's what's going to happen. So these people who have run price up have a great amount of new people to sell into. So it'll be perfect. They're going to unload into a whole bunch of new people. And I think that's what's going to be happening through here. So again, don't be buying Amazon up here. It's probably already had its move. Watch for a pullback. And then we'll see if it can kind of get going after that. But same deal. There's a big gap between price and the hourly 50. And I have a feeling that typically comes back down, below that. And we'll have to see if it kind of comes back below the 50. And then if there's a move to the upside. So yeah, I think that they're all kind of pointing towards the same direction for what I'm looking at. Now, AA, let me bring this over here on, say, the weekly and daily and hourly charts. I had somebody ask about AA today, about being bullish. And I think the reason is because it's probably sitting on the weekly 50 and the daily 200. And, maybe it's kind of doing this and the Moxie indicator is above zero. So maybe it's trampoline moves, stuff like that. There's the possibility, there's definitely the potential that price is going to sit on those moving averages and find support and then move up. Okay. What I want to just show you guys is why I may not just want to, I just don't want to trade this. So yes, there could be a move, but is this the best move? Is this the best setup that we could be taking right now? I don't think so. Even if price came up to here, like that, sure, you can make some money. But what if it doesn't? And that's kind of where I'm coming from is let's try and think about safety here, think about risking your money. And I look at something like this and say, I'm not confident of where this thing is going to go or that it's even going to do that. And let me show you some examples of why that has me concerned. So ZIM, you can see in through here, get that backed out. So ZIM, you can see kind of, let's get that there, did kind of the same thing. It pulled back, ran into these moving averages and then was able to move up. Now, if you were, let's just say you were correct. Let's say you bought here and here it is now. Yes, you were correct. It went up a few bucks. You made some money. But would you have wanted to experience this? Would you have been able to hang on to it? Would you have been stopped out? Maybe with a trailing stop, something like that. Look how ridiculous, but how uncomfortable that if you got the right entry there, it's up and now it's right back down. And then it's up and it's down and it's up and it's down. And really all you did is move there. And it was a very, very uncomfortable ride. And I look at something like that and I say, I would much rather avoid that. I don't want to experience that because that sucks. And so I look at AA and I think, well, there's the potential for this to move like that. And then I look at something like MATX. And what about this one? It's gone nowhere. So you can see here, it's also sitting on the weekly 50 and basically sitting on the daily 200, just like AA. And what did it do? A whole bunch of nothing. So that's the risk that I would see. What if this doesn't go anywhere? So MATX, nowhere. And you can see eventually it's running into its daily 50 because 50 came down to meet price and nothing's going anywhere. So that's kind of what I'm looking at. I wouldn't want to throw my money on that either. And then you could also look at NVST. This is another one that kind of similar. And let me get these moved out. So what you could see is price came down, and then maybe you could even say that there was a trampoline move, actually an elf shoe on this one. So you could see here's the leg, here's the heel, here's the arch of the foot, there's the ball of the foot. Hey, is there going to be an elf toe? Maybe, but if you didn't get this right, let's say you bought here or bought here, it's gone nowhere. So that would have been really, really tough to hang on and still feel like you're maybe correct. So, and also, what if it goes down? What if price is actually about to run into the underside of a downtrending daily 50 and start moving down? That's a possibility. And so that's why I'm looking at some of these chart patterns and saying, you know what, we just don't have to try for everything. And as I said earlier, we're in summer. Some of these things aren't going to move. They could just go sideways. Even stocks like Roblox or Roku or Facebook or Netflix, they are so far down, they may not end up going anywhere. Like look at Facebook. So Facebook, maybe you're thinking it's on sale. Cool. Maybe it's done going down, but what if it doesn't go up? So like, what if you're buying in here, but it just kind of doesn't go anywhere for a long time, or maybe it kind of goes up like this and does this and it just never really does anything. And that's the concern I have with some of these names, especially the names that have gotten just absolutely taken out back and shot. Shopify, for example. Do we think this thing's going to recover? I don't think so. Of course, there will be bounces and pops along the way. Maybe if you want, you can figure out how to trade a bounce like that. But what if this thing just goes nowhere? Kind of just hangs out and meanders along the bottom. I think even space is a good way of looking at this. Virgin Galactic. There we go. Yeah, okay. So right there, it basically stopped going down and it did have a little bit of a move. Catch it if you want. But ultimately, it fell down again. But for the most part, it really hasn't gone anywhere. Look, it's gone sideways for a very, very long time. And that's my point is Facebook, Shopify, names that have just been taken out, they're dead. I don't know if I'd really want to play them. I don't think this is the time that people are really going to put money to work and make these things start going up. Of course, there will be bounces and things that are potentially tradable if you want, but as far as a trend, I wouldn't worry about them. How about USO? USO seems to be doing well. We've been talking about that. Definitely bullish oil. Oil and energy have been the strongest sector. There was a little bit of a pullback the other day as price came into the third ATR and the previous high. And basically, it was holding the daily 50 and continued to move on up. Now, at some point, I think oil is going to wear out and roll over, and that will probably mark the end of the bear market rally on the S&P. So watch for oil to wear out eventually. And when oil wears out, that might be the end of the market for the time being. So yeah, definitely keep an eye out on oil, as it is the pretty much the only sector that's really strong and leading. Now, if we look at UNG, here's another one that I'm getting a little bit hesitant about. I've been saying I think this thing's actually going to wear out. I think that price and the daily 50 are probably going to meet. Now, where and when, I don't know, but I have a feeling that's what's going to happen. And it could also go below the daily 50. Just look at the past. Oops. Let's see. Don't want that. So look at the past. You can see here that price did get to the daily 50, bounced, and then came back to the 50 and failed it. So there could be all sorts of shenanigans. I think right now, UNG, the actual natural gas ETF, not the place to be. I would not want to be long on this anymore. I think it's going to settle down, probably trade sideways, might pull back, but I don't think it's really ready to go up any further. And so I would move away from that specifically. All right, then some other commodities I've seen also taking a bit of a break. Here's corn. So it's starting to roll over a little bit. Maybe if it's going to stay in an uptrend, then maybe it will find some support at the weekly 21. But mostly I just want to show you guys that it got really overbought. You can see it very clearly on the weekly chart. And then there was kind of a double top, and both of them were inverse trampling moves. Price should not be over the 50 if the Moxie indicator is below 0. And that's what we're seeing here on the 60-minute chart. So bit of a pullback there. Soybeans. Nothing constructive yet as far as it rolling over or failing, but it's also looking kind of weak. You can see price went up, the Moxie indicator went down, and now here price is on the 50 and the Moxie indicator continues to go down. So I'd be careful with this one. It looks like it might be taking a bit of a break and a breather also. That's soybeans. And then wheat. Wheat was looking pretty strong for a while, and I'd be kind of curious to see if oil is going to do something like this. I don't think so, but it is something to be aware of. Look at what happened at wheat, right at the double top, along with the third ATR. It got hammered. So again, I don't think oil is going to do this, but it is something to really be aware of. If you're in something and it kind of comes up to a double top like this, it could be a reason and excuse to sell into, because all these people who got long up there and are now trapped, they're trying to get their money back for anywhere near break even. And probably a lot of selling came into it. So natural resistance area, but even wheat starting to weaken, at least on this time frame. Basically not going nowhere. It's really, really high. Probably needs to chill out. Maybe it'll keep going down. But you can see here on the hourly chart, ran right into the underside of a downtrending hourly 50. So that's wheat. CF, I'll just show you a couple of the fertilizer companies. They too are not going anywhere. They definitely need to take a break. Maybe they will find support at the weekly 21, but if they can't, then definitely look for price to break down and maybe head back towards the weekly 50. This could be the beginning of the end for stocks like this, but we don't know yet because they're mostly just flagging sideways, and we're going to have to find out if that weekly 21 is support or not. NTR, basically the same thing. You can see the same, almost exactly the same weekly 21. Let's see if it's support or not. Double bottom, does it go up or does it go like this and then continue to go down? I'm not so sure about the long side, so I would just kind of put my 2 cents out there. Be careful on the long side. Some of the other ones, LTHM, this is lithium miners. It was kind of some crazy stuff in through here. I was looking at this, almost kicking myself, thinking, oh man, I should have seen this. Why didn't I trade it long? It was basically a flag into the hourly 50 with the Moxie indicator above 0. I was like, oh, I should have taken it. But then you know what happened? 2 days worth of moves to the upside. It gets overbought, extended, third ATR, and then it crashes all the way back down to where it came from. So then I'm like, oh, good, great. Glad I didn't actually buy that. And I think this is actually indicative of a short squeeze. This really, really looks like a short squeeze. Basically something that kind of comes out of the blue, goes straight up for a couple days, squeezes out the shorts, but then when the shorts are done covering, there was nobody actually buying this. It was just a whole bunch of shorts having to exit. And so if nobody's actually buying this, then the price comes right back down. And I think that was happened. So I think that was just a short squeeze. That's what you need to be careful of in this market, because the brutal to the upside and brutal to the downside, depending on which side of the trade you're on. And then even ALB, this is another one I was actually looking at shorting eventually. It did have a big move up, so I was like, ugh, good thing I didn't short it yet, but right back down. And that kind of maybe sticks back to my thesis that I think someday these are going to be shorts, but not quite yet. So you can see here, I was looking at this, the Moxie indicator was looking pretty weak, but I couldn't short it because the rules weren't there. Price, this was technically a trampoline move, right? So that was actually a bullish situation, despite the negative divergence that I was seeing on the hourly Moxie like that. But there was no short trigger entry. Now, as I said, I still think that this is probably going to roll over at some point, mostly because the 50 is below the 200, and I think that is, well, that's the death cross. So I think it's just a matter of time until this thing continues to roll over. And you can see here, there's basically a double top going on there. So it's going to be fun stuff to watch in the coming days and weeks with this market. No shortage of astonishment. All right, guys. Well, thanks again for tuning in, and we'll see you at the next one. Take care.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.